Hi, everybody. Welcome to the Russel Journal Nightly. My name is Russell, and it's night. It's the night before we go into Monday. So it's Sunday. We're getting ready for the stock market, first trading day of the new year, and really racking my brain over here trying to figure out what to expect. All right. So the very first thing I talk about is the indexes are open. For those of you who don't know, the Dow Jones opens up the Dow Jones, S&P, and futures, the Nasdaq, I'm sorry, all open up pretty much. They run 23 hours a day. So today they opened up, the Dow's up 138 points. That puts it up pretty good. The S&P is only up 21 points, which is mostly flat, but the Nasdaq is up 95 points. So, which is that's a really good up for that thing right there. Coming up in the news right now, we've got a few things that sort of give us some sort of indication as to how the market might travel. And the truth of the matter is we have positive forces versus negative forces really in play here as far as the market goes. I had to write them down because there's a lot of stuff. As far as our up forces go, you've basically got to end off the Santa Claus rally. It's the beginning of the year rebalancing. So we expect to see a lot of money that came out in the early weeks of December coming into the market, start moving in. That being said, it is also the beginning of a new let's actually not do that. I'll come back to that one here in a second. So basically it's what's gonna depend is kind of where that money came from. I have a few theories about where the money has come from to fuel this rally. I don't think it's American investors, although it could be. Some institutions really driving money into the market. That could be possible. But what I'm thinking it is with the inflation in America reaching between 6 and 8%, there's a pretty good possibility this is foreign money coming in, and that money is they're trying to find some place to stash their cash while their countries have even worse inflation. I know Turkey just had a major collapse in their economy. They'll be rebuilding for a significant period of time. And the other thing, too, is with China and Evergrande and their housing collapse, there's a lot of money over there that may be trying to get in over here so it can be safe. And that's really what I want to, I think. Now, if they got all their purchasing done by, the end of the year, by last Friday, then we could probably see some pulling back going into tomorrow. But if they're really looking to book out of their economies and into this one, this could continue on for quite some time, could really push this rally even further and harder. When we go to the charts, I'll let you know how confident I am in that. Okay, so the next thing that is happening is for the NASDAQ, if you're trading QQQ this week, especially tomorrow, earnings report came in for Tesla. Tesla managed to crush their car deliveries of 82%. They are just throttling out cars like you wouldn't believe. And so these guys are, Tesla is now $1 trillion company, so they make up a very large section of the S&P 500 and of the Nasdaq as well. So the thing is there's a pretty good chance that Tesla is going to push a lot of the indexes up even higher. That probably explains why QQQ is up, or Nasdaq is up almost 100 points already. Already now it's up 100 points. So that is, and there's a lot of people who want to buy Tesla. They just need a reason. Okay, so there's a pretty good chance QQQ will be and the NASDAQ will be just ripping tomorrow, or at least be very, very choppy. It'll have a lot of bullishness inside of it, in spite of the recent rally and how it sort of was a flat rally for the NASDAQ. The big problem that we have is now on the downside of that, there are market forces that are moving down. Very first one is the Fed is still looking to raise that interest rate come in March, and they're tapering back on their bond purchases, With them pulling back on their bond purchases, that will be less money going into the market and less QE there. So we may not see as much strength in the upward movements as we had, just because there's still not as much. I think they're still buying something like $30 billion worth of bonds every month. So it's not, it's not ending. There's not an end of free money. There's just less free money there. So we'll see. There might be some shock and awe to it where people want to get their money and get out fast. So there might be some shocks to the system coming in, but we will have to wait and see what that's going to do. The other thing about it is the end of the child tax credit just happened. It's starting this month. So there is going to be some families that have a lot less income or even less disposable income going into this year, right into the start of it. If they have any of that money in the markets, they're probably having to pull it out. Like we'll see what we saw in June with some of the pulling out of, the Robinhooders pulled out a lot of their money to start paying bills. So there's a chance that is something that could happen tomorrow. The other group that we're looking at to see if they might be selling off is your retirees. It's the beginning of the year. It's a new tax year. They have, last year with a lot of the rising rates and how much things cost, we could see some retirement money really moving out in large quantity tomorrow or throughout this, like sometime during this week is what we're looking for. That could get rebalanced though. It may just seem like money flowing from one place to another place. So that's another key possibility there as to what could be happening. And then okay, so the last thing is we have topped 500,000 of Omicron variant in this country of cases, and hospitalizations are slightly moving, or are quite, actually, I believe they're moving up. Some places reporting a 30% increase in hospitalizations or of illnesses as far as the COVID variant goes, the Omicron variant. So it could be a risk-off day tomorrow. I'm not counting on it. If it is, we'll be able to see that based on our technical indicators and have some sort of idea whether or not this move down is happening. So we will definitely see. One thing I want to make clear is that there is a lot of times where in the pre-market we see indexes get pushed way up. This is a big part of what we call a pump and dump, where they will push them up into the open, and then we'll just proceed to see them sell off all day. Normally, where I've seen this the most is this happens in penny stocks that like to trade during the pre-market and the after-hour sessions. You'll typically see a lot of stocks hit a pre-market high, and then they'll never reach those heights again. And it's a lot easier for traders to manipulate that because the SEC doesn't regulate trading halts and stuff. So now that's neither here nor there, but we do tend to see similar sort of things happening in the greater indexes. So if we get too high and too hot in the morning coming into the pre-market, there's a pretty good chance that might be an indication of a sell-off, where we're just blowing off the top of this last bull rally and we pull back into January. So I'm going to go to the charts right now. We're going to look and see what we've got going on. And we are going to start with SPY today. This is the ETF that tracks the S&P 500. Now, again, based on kind of what we've done before, I'm going to go back and pull back. So I added some stuff in here. I added these vertical lines here so that to show you what happened over the last couple of years during the stock market, first month in January. This will be what opens tomorrow. What we'll get is this line right here. We'll get a candle along here. But last year we had in the first week, and for the first week we had selling happen in the first week. Again, the year before that, more selling in the first week. But we had, now this one is interesting because we had the pullback and then we had this massive buying come in here. So that's 3. And then over here, the first week was definitely very bullish as we blew through the Christmas rally. And again, January from the year before that is still pretty bullish. Well, kind of. It was a little. It's basically flat here. This doge just shows that like this candle, this little bar where my thing is. This thing here is called a doge. I'll pull it into the middle so you can see it. That's like a doge candle, doge-ish candle. It's a little bigger than a doge, but whatever. Some buying, but not a lot. So there might be a lot of opportunity on both sides. So far right now, they're calling for a very volatile year. Anyway, this is just on the monthly. So go back to the daily and look at it. Look at our chart. There is a few things that are interesting here. One, this is the 6 EMA right at the top here. Normally I turn these off for you guys, but you know, this is where we really need all the details we can get today. The bottom line down here is obviously the 50 EMA, and then we've got the 15, 9, and the 6. Okay. We're sitting right on top of the 9, which is somewhat of a bullish indicator here because we could spring load up into this. Like this may very well just be the pullback. I'm actually counting on things being a little more bullish tomorrow. Again, for me, puts are oftentimes easier than calls. They're easier to make money on. So I tend to prefer them just as far as like gauging movements goes, but I'm definitely thinking tomorrow we're going to have a pretty risk on day going into the new year with rebalancing. There's going to be a lot of money, I think, coming into these markets or just moving into the bigger stock plays. And because this is the S&P and the other ones we trade are, you know, SPY or QQQ, I expect to see some pretty good movement in here. Now, that all being said, too, right now, the US dollar is at an inflection point. So if it breaks down tomorrow, if it doesn't continue its breakout for US dollar, then we can probably count on seeing this thing pull massively back tomorrow if the dollar keeps going up. But if the dollar breaks down, if the dollar keeps going up, this will pull back. And if the dollar breaks down, or if the dollar goes strong, dollar goes up, this goes down. Dollar goes up, no, dollar goes down, then this will go up. So they'll move out of Forex and into stocks. So that's definitely a possibility. Again, you've got market forces like Tesla, which is just a behemoth right now. That's going to push this pretty hard. However, you're going to have a lot of people, a lot of swing traders looking to take profit on the news from Tesla. So anyway, now the big things, the big drivers that we're looking for. So before we had our line where we talked about this, but we usually garner support off of the 50-day moving average. You can see we kind of hang out around there into any of these pullbacks. What we will probably see, okay, so then this line here, this is where our resistance, again, this peak right here became support, okay? That's what this line symbolized. And this line's normally my resistance line, and I keep it textured at that texture. I don't do colors. I'm colorblind, so I can see the difference between red and green. But this was resistance. You can see we struggled to get above it, struggled to get above it, struggled to get above it. And now what you really want to see it really bring us into support. So it's very well possible tomorrow that we see a flush down towards the $72 range in here and then catch right here and continue that run back up. Now, the one thing that will be really weird about that is that this would make for a double bottom right here. You don't typically see that off of these peaks a lot, okay? And you can tell over here where it pulled back, pulled below everything, and then ripped up. So we might actually see it pull back even further to down here, somewhere in that area as far as that goes. So again, I'm probably going to say I'm long biased going into tomorrow because I don't know when and where that money is going to move in. I know there is money that has to move in sometime this week, and I don't know whether it'll begin tomorrow or whether they'll sell tomorrow and move in the rest of the week or what, but that's kind of what I'm thinking. Again, you can see the same thing, QQQ. Again, I added a bunch more lines in here, which you probably don't need that much. QQQ is definitely giving us some pretty good indicators of where it's at and where it's going to go. I'm going to delete this one. We'll pull this down into be support right there. Again, looking at this, we've got a similar sort of chart thing happening here. We get this pullback. Again, too, as they possibly move out of tech and more into financials. This one, I'm probably short bias QQQ right now. And the big reason is January starts and the financials, the banks are allowed to start doing their share buybacks in January. So if you're watching like XLF, which is a financial index, they own basically bank stocks. I expect that to be bullish, and I expect this to be bearish as, again, we continue to cycle out of tech and cycle back more into financials or cyclicals. The other thing that's about that is a piece of news is apparently our housing market's just absolutely ripping right now. I would say it's on fire, but that might be a little too much of a pun. So again, looking at the chart, really needs to hold this level. This is where support has been, where resistance is, or support should be coming into resistance. Resistance should be coming support, but you can see where we failed here a whole bunch of times all throughout, all throughout last quarter. So you're, pretty good chance this is pulling back, I would say. Tesla will probably slow that rate of descent as far as things go, but that's where we're at. IWM, again, this is the other thing. So we look at IWM, and I put a bunch of extra lines in here the other day for you guys, but I'll get rid of them now. I think they're pink. I don't know what color those are. Again, still within this sort of, first of all, with the 200 flattening out right there, that's not super great as far as this goes. Sure, it's going up, but it's the 200 is flat. So that, really, if we go back and look in places where, see how it flattens out right down here, right before the last crash, that was, it flattens out all through there and then we crash, right? Stays flat. Even then it flattens and then we crash again, so, really with it flattening out, the 200 flattening out like that, I'm not super confident that that Russell 2K is going to keep doing what it's doing. However, it might, but I doubt it. Small caps are just definitely not a great place for big money to be right now. And I think I last saw the report that said 52% of the stocks that make up IWM are below their they're below their 200-day moving average. It's either their 200-day moving average, I can't remember which, but it's very bearish. And so the bad companies in this index are definitely weighing heavy on the index, and because there's so much more of them, they're heavier weighted than this one is. So I'm really probably pretty bearish. I'll definitely watch because we're going to try and scalp these bounces going throughout tomorrow. And what we got here too, again, hanging below, rejected below the 50. We can see we did that before. They may be able to push these averages up and get us back, get everything back up over the 50, but I'm not super confident in that, especially because like the path of least resistance is definitely to the downside. So I don't know who would be really chucking a whole lot of money in there right now. So as far as I'm concerned, again, we're back up over here. Look for it to hold support at the 218 mark, somewhere in there. Look for it to break above the 50-day in order for it to be bullish at 223.54. And then look for it to really break this resistance line at 233.59 at some point. Hoping, I don't care whether it happens or not. Like I just hope to be on the right side of the move, whichever one happens. So that's kind of how I feel about everything. Zoom in on that. So we're going to look at IWM, SPY, QQQ. Really quick, just because it matters, let's go look at Tesla. Yes. Now, I don't trade Tesla. I've never traded Tesla. It's, I just, I'm weary of Elon Musk is my God type mentality. I'm sure he's a great guy. I'm going to go look at it on the 1 minute. We're going to see what's going on. Okay. Yeah. So see how they're like pushing it up? See how it's got this like uptrend going into the pre-market? This is pretty common, like little like bait trap that swing traders do in order to keep it, they get it pumping. It needs to break above this last little flat spot over here. But like this spot right here, where's this at? Kind of right in here. They did push the 50 up over the 200, which is a pretty good sign. But you got to break that it needs another dollar move up, which is pretty easy for Tesla to do. Tesla just super volatile, swings 100 points in a day, up or down. If you really know what you're doing in the options market, you can clean house. I'm too scared to play over there. Those the premiums are too much for me, but that's kind of where I'm looking. So just to recap, because we had a lot today, looking at SPY going into the close, going to see this gap up tomorrow. That will definitely happen at 1 a.m. We'll definitely see this gap up happen in the market. But will it hold? We will see. IWM probably going to see something of a gap up. Really not a lot of volume on that. What was Friday's volume? 24 million on Friday. And you might just straight up see profit taking going into the open tomorrow. That may be something that happens. Last thing, again, QQQ, Tesla can do it some favors and help hold it up. But my overall feeling, you'll probably get a slight move up with Tesla, but I'm expecting to see this pretty much kind of push pull all day to stay up there. Again, not a lot of reason to move into tech unless you think that Omicron is going to shut us down again. And it doesn't look like that's going to happen. So we'll see. All right, we can go ahead and get rid of that. So, so tomorrow just really lean heavily on your technical analysis, I would say. That's my game plan, to sort of catch and see what's moving the most. Really going to keep my ear to the ground and listen to what the news has to say. There is one other thing we can look at that can give us some sort of indication as to what. Give me one thing here. Okay, so there's no report scheduled for tomorrow. Oh, that's we want to go down one. Okay. So tomorrow we're going to get the PMI for December, and we're going to get the construction spending. Okay. If that construction spending comes in and it's up, then there's a pretty good chance that IWM could run on just positive construction spending. A lot of smaller companies on the Russell 2K benefit from construction spending. Expecting the PMI, it's just always been good for the last several months. I don't expect it to change. I expect them to be just really ramping up a lot of production because of supply chain problems. And I just expect that to continue to look like it's growing. So as far as I can tell, until Tuesday at 10 a.m. when we get the job quits, which the job quits will probably be pretty hot because you have a lot of like end of seasonal work. Pretty good chance they're going to be pretty bullish. So that's if you had to ask me what I'm doing, puts or leaning more towards puts or calls, I'm definitely leaning towards calls. So anyway, no matter what out there, guys, remember to plan your trades and trade your plan and just respect your risk. All right, guys, have yourself a good one. Happy New Year to you all. Thanks for tuning in. Oh, do me a favor if you can, do the whole like and subscribe thing. I don't really want to be that guy, so I might find something else to ask you guys to do. But like I said, just respect your risk and respect the like button, I guess. All right. Talk to you later.